One of the, the main problem area that we have today is, of course, the point of public financing. What you see here is some indicators for the public finances between 2007 and 2010. And you see that in this short period of time, there had been a dramatic deterioration of public finances, both at the Eurozone in general and for individual countries in perspective. So I think, and this is in the public discussion, I think, very often not fully appreciated. The main element is, of course, that this deterioration is crisis-driven. So the main element of the deficits is due to automatic stabilizers. And this is something where the only long-term solution is to have adequate economic growth. But this is not the whole story. Besides this, we do have, of course, also some elements of structural deficits. And especially if you look at it in the long-term view about the costs of an aging society and so on, we have quite a number of structural problems. And I would say the first need for all countries concerned is to deal with these structural deficits in public finances. But of course, for those countries that have unsustainable deficits, whatever is the macroeconomic situation, they have to try to reduce these deficits, and this is where they get some international help to make this process a bit smoother, but it has to be done. So I think this is just now the main impetus that has to be achieved, and we hope that in the countries specifically concerned, we are able to achieve this. This, of course, also forms the background to a situation that we just already see in Europe today, that we do have quite a rather heterogeneous developments in Europe. And especially, of course, in those countries that have to embark on fiscal consolidation, growth rates will be pretty slow for some time to come. I have to say very clearly, for the policy of the European Central Bank, this policy only can be oriented for the totality of the Eurozone. We cannot take into consideration the situation of specific countries. This is something that has to be done at the level of the EU. We do have, of course, to a certain extent, structural funds, and we do have, perhaps, hopefully, more stronger additional instruments for solving this. But this is not a matter of monetary policy. But in general, what we will observe in Europe is that convergence of the different economies most probably will need more time than had been expected or had been hoped some years ago. So this, and we see this also in other situations, that you can have a single currency, but convergence may be a very slow process. Or if you look at a country like Italy, which is just now celebrating 100 years of unification, it is a process that may take very, very long time with not really a clear outcome to be expected. Last point that I want to raise is the question of inflation. Do we see tendencies, inflationary tendencies? So what we see is that, of course, during the crisis, we had very low inflation rates. We were many of us were afraid of deflation, and we see, of course, that countries like Japan have been in deflation for quite a long period of time. And deflation for a central bank is a special challenge because a central bank, if they really want, we can break every inflation with high costs, but we can break it. And the Volcker policy in the US is a good example for that. A central bank cannot really overcome deflation. So therefore, this is a specific challenge which we were able to avoid. Now, of course, we are here with a different situation, but one has to be quite aware that this is the result of sharply increasing prices of energy and some raw materials. Therefore, the base effect is that in 2011, we think that we will have at the EU level an inflation rate above 2%, with about 2.2 to 2.3%. In Austria, our forecast is 2.1%. But our forecast for 2012 is that we will have an inflation rate below 2%. For Austria, it's 1.8, and more or less the same number for the eurozone, because then we will have the basis effect. So we do not expect that let's say energy prices will rise more and more again. So we have had a strong jump, but we do not think that this will go on forever. And if they stay at this elevated level, this means that there will be no increase and therefore no percentage change in inflation in the year 2012. So we think that inflation, and also what we see is that inflation expectations are contained. So if you look at the long-run perspectives, but of course it is something that's clearly, when we look at it with, as we have, with strong vigilance, with something where we have to signal that alertness, but we have to see this in a general stance. And I personally see, let's say, a tendency to a more, let's say, a policy change, more in the context of normalization. And so, as I said before, because I think that inflation threats are mainly with regard to second-round effects. And as long as we are able to avoid second-round effects, we do not see that this will be a continuing challenge.